Hey, Tim Sykes here. I hope you're having a good weekend. I am so proud to announce that my top student, Tim Grattani, just passed $3 million in profits. He just verified a whole bunch of trades. He made over 40,000 in the past week or so. Just awesome. And this was a guest blog post that he wrote for me on my blog, timothysykes.com, with 30 of his most useful tips. He wrote a post called 20 Useful Tips when he passed 2 million in profits. That was about like a year and a half ago. So he's climbing up the ladder. And this was a big bottle of champagne that I got him when he actually passed $1 million in profit. So I guess I need to get him a bottle of champagne that's like 3 times that size. I don't know if they make them. But definitely read this blog post. Here's a little video that my team and I made just celebrating his success. This was him and my other student, Kristen, in the Maldives. Sometimes I take students on trips. I know it's crazy, but it works. And Tim just been an amazing student since the beginning. He tracks everything. He has literally thousands of spreadsheets, and I highly encourage you to watch his DVD called Trading Tickers. But first, I want to get to these 30 great tips and go over them. In this blog post, I just reviewed a little stuff. We've been on CNN and Fox together. Some people think that like this is all made up, and I want to refocus that negative energy and say, look, it's real. We show every single trade publicly, even the mistakes. He's made some mistakes along the way. I've made some mistakes along the way. And I just do not trust anybody who doesn't share their, I guess it's kind of like their batting average publicly. There's a lot of people out there who claim to be successful. They claim to be millionaires, and they show like one screenshot. Oh, look at my $1 million. Well, how did you get there? Show us trade by trade, because the stock market is full of sketchy people and frauds and liars. And I would not believe a single person that they are successful unless they show everything. There was a guy named Bernie Madoff, and he stole billions of dollars, and everyone thought he was successful just because basically he was running the largest Ponzi scheme. This is not a Ponzi scheme. This is not a scheme. This is teaching, and this is education. And I'm so proud that Tim Grattani really gets it, and he shares everything publicly. Even when he has some bad trades or, sometimes where he's not doing so great, we show the good, the bad, and the ugly. So there is some negativity out there because, frankly, we're sharing all of our results, and sometimes it's ugly. But I would much rather have ugliness and negativity than sketchiness and shadiness, which is basically what the whole stock market industry is. Remember, 90% plus of traders lose. So while everyone on message boards and chat rooms looks like they're making money, if you actually look into their accounts, they're not. So be very, very cautious when you hear of somebody making $1 million or $2 or $3 million. Show everything. And that is what I think I'm most proud of Tim Grattani for really understanding that. I have several millionaire students. Some of them don't want to share everything publicly. It's their choice. When you have a lot of money, it gets weird to talk about money publicly. I get that. But we're in an industry where there's just too much shadiness. So Tim Grattani really has made, now $3.03 million. But let's get to his tips. Enough about me. So many great tips. And I love this. And he says, trading is not easy money. Unless you are prepared to put in a ton of time and effort, you will not find success. Expect to fail early and often. It took me 9 months in one account blow up to even begin finding consistency and start seeing profits. Learning takes time. I could not agree more. The other day I wrote a blog post about 2 of my other students. One had passed $100,000 in profits. One had passed $300,000 in profits. Both of them had early losses, a few thousand. One guy had wiped out his account like 5 or 6 times, like 2 or 3,000 at a time. It's tough to do that because my rule number 1 is to cut losses quickly, but trading is tough and you do not have the success right away. I was fortunate, when I got started in 99, it was very easy to make money. If I got started right now, I would probably take 6 or 9 months to study and trade small and not have these big expectations. And this is coming from my top student. So if my top student is saying that, you can get a sense of what reality is. Number 2, don't trade large when you're learning. This ties into the last point. Why play huge position sizes when you're still figuring out what's going on? Since you will likely lose early on, make sure those losses are small enough for you to recover from. I mean, every single point that this guy says is dead on. do not trade big until you're comfortable. Even when you are comfortable, you don't always have to trade big, you know? I've been doing this nearly 20 years and you see me screw up. I'm trading small, especially now, with the scary stock markets in the past few days. So don't feel like you have to do this big all at once. Focus on learning. Go big on education. Invest in yourself at first rather than, any big companies or random companies. Number 3, trade smart size related to your broker's commission structure. This is tricky balance to strike related to the last point, but if you trade too small, commissions will eat you alive. And he says, I always need to strive for 1.5% gain at most to break even. So for me, Tim Gruttani and I differ a little bit. I introduced him to penny stocks, but he's developed his own strategy. And, he's trading a lot more often and taking smaller gains. For me, I'm not so worried about the commissions because guess what? I don't trade that much. I think of myself as a retired trader. I only want to come back into trading when there's a play that's good enough that's going to make me feel guilty for, if I miss it. So with him, he's worried about commissions, but it is something to take, into thought, into mind. About your commissions. And for me, I don't really care, but for him, that's big. So we differ on that point. And there's no one right answer. We're all different. We're just sharing our experiences. I don't trade that much, so I don't worry about, small commissions. Number 4, don't follow anyone's alerts. It doesn't matter if it's a guru you just signed up to. If you just try to tail others, you will not find success. You are far better off learning why successful traders make the trades that they do and using them to help develop your own strategy. This one, 100% dead on. I say in every watch list and every trade alert, do not follow me. Do not follow anybody. The reason why I share what I share when I make a trade, there's a lot of chat rooms where they just mention a ticker and the price and they say bought this, shorted this. And that's not really educational for me. I want to know why. What is the risk? What is the mentality? What is the pattern? And in my upcoming DVD called Trader Checklist, I'm going to actually have a numerical formula to showcase which trades are better than others. And so you'll learn. But you have to be prepared. You have to get this information inside your brain. You can't rely on others. Number 5, especially don't chase trade alerts. If you're stubborn and you still want to tail that guru, ask yourself, what price did they buy at compared to where you're getting in? If you're chasing and buying significantly higher, your account is not going to last long. And this is the problem with chasing, not just chasing alerts, chasing anything. You have to try and think of a plan before you risk your hard-earned money. Why are you putting money into the stock, long or short? What is your goal? What is your risk? If the stock just keeps spiking and you're like, oh my God, it's going to the moon. Well, it's probably not going to the moon, and you're probably getting a little too, aggressive and a little too emotional with it. And you need to think of specific, meticulous entry points. So don't chase any stock. I would rather miss a trade than get a bad execution. And sometimes I do chase. It's not an exact science. But try and be aware of it. Number 6, if you have to ask for advice, you shouldn't be in the trade. I know it's reassuring to get the opinions of others, but trust me, it will do far more good for you to learn to trust your own opinions and trade plans. And this is a common thing in chat rooms and on message boards. What do you think of this stock? What do you think of this stock? Well, I have a plan. So, me, Tim Sykes, as a teacher, I'm going to tell you my plan, but lots of people just bring out random plays. And they think it's like, ugly bald-headed man with underperformance on TV time. Buy, 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 sell, sell, sell. And that's not how I trade. That's why he wins 30, 40% of the time. And I'm winning 60, 65, 70, 75% of the time, just like my top students. Always have your own plan. If you have to ask questions about how do you develop a plan? What are good patterns? What are some historical examples of this pattern? That's why I basically catalog everything in video lessons and DVDs and webinars. And a lot of people say, oh, it's too much, I'm overwhelmed. Well, get ready, okay? If you want to be a profitable trader in a very difficult niche, you have to study the past. Number 7, determine risk and proportion size or position size based off the chart. Preconceived percent loss limits are silly. Use key points on the chart to tell you where to stop out. This is great because a lot of people say, oh, Tim, I'm going to, just stop out if I lose 8 or 10%. That'll protect me, right? Well, if a stock drops 8% against me, that's a big loss for me. I usually stop out much smaller. And for me, it's not about a percent. It's about if the chart doesn't work. If I'm buying a stock right at a breakout level and it's not breaking out and it's only a few cents a share, but it's trying to break out and failing, I'm going to exit with a small loss, because if it does not break out, if it tops there, the drop will come very quickly and you might not be able to stop out at 8 or 10%. So for me, and for Tim Grittani, it's not about percent. You have to look at the chart. You have to look at past resistance and support, and you have to come up with a plan. Number 8, know your risk level before entering a trade. This is the first thing I determine before placing a trade. And this is so huge. A lot of you guys just see money and dollar signs when you get into a trade. You don't think about the blind side. You don't think about what can happen if the trade goes wrong. So always think first, what if I'm wrong about this stock? And it doesn't matter what stock it is, you can always be wrong. I'm wrong sometimes. We can all be wrong. So don't feel like you definitely have to be right. Always think about your risk. Sometimes I miss a trade just because a stock is moving too quickly because I can't determine my risk. Number 9, if a stock is beyond your risk, never add. And Tim Grittani talks about how it took him a while to understand this. If a stock is not going in my direction, I want to get out or lessen my position and lessen my overnight risk. Sometimes I even lessen my overnight risk if a stock is doing what I want, just because it's a risk to hold overnight. I don't want to add to a position unless it's really going my way and it's a really good setup. Don't add to losing positions. That's a pretty good stance right there. Number 10, money moves markets. Trash can run, good stocks can fall. Trade the chart pattern, not what you think the stock should be doing. And this is a problem that a lot of people have. They try and value a company, they try and value the news, and the price action is going against what their thesis is. So a lot of people hold stocks. They're like, oh, but this company just reported great earnings. Why is the stock going down? Let me add to my position. And that goes back to the last point. It doesn't matter what you think. It doesn't matter what I think. What matters is what the market thinks. And the market will tell you what it's thinking based on price action. So if a stock is going further and further away from you, there's something wrong with your thesis. If the stock keeps going up and you're long, then you're in the right. If you're shorting a stock and the stock keeps going down, you're in the right. The market is on your side. So don't have any preconceived notions about what a good company or bad company can do. Number 11, it can always get worse. Maybe you got too stubborn on a loser. Maybe the stock is making a move that makes no sense. Never assume it's up too much or it can't go lower. It can't. And this is this is one of the best blog posts. That's why I have to make a video just explaining every single point too. The stock market is so tough if you let it be. If you ignore rules, if you don't cut losses quickly, if you get stubborn, it's not going to be your best friend. It's going to be your worst enemy. And you always have to be prepared for that. So I apologized a few days ago for my nasty attitude. I can get a little too nasty, but at the same time, I'm not sorry for warning people. There are some gurus and teachers out there where they're just all nice and they don't prepare their students for the reality of this battlefield. The stock market is not always nice. So I do have to be nicer, but at least learn and recognize that any position can go seriously against you, and that will make you trade a little more conservative and a little more cowardly, like I like. Number 12, don't be a sucker for a good story. Whether it's an OTC or trades on a major exchange, don't ignore price action. This was, my biggest loss of $500,000 plus early on in my career when I invested in my best friend's dad's e-ticketing company. They basically invented print-at-home ticketing. I was right about the technology. I was wrong about the company. And I lost 6 figures and I lost all my credibility. You can't just fall in love with a technology or a company. There's so many things that can go wrong. And the stock price is the key. The stock price will tell you. The problem with my e-ticketing company was that, yes, they had a good product, they had a good technology, but what did they do to actually get there? They had tons of debt. They had, just rubbed a lot of people the wrong way, and they ended up going bankrupt before the new CEO who thought, who told me that he was going to be my savior. He actually put the company in bankruptcy, bought the company in bankruptcy, scooped it out, kept all the same contracts somehow, and then later resold the company for nearly $30 million. So screwed all of the shareholders like me. So do not believe any technology or any story. There's so much just downside risk, and most small companies will fail for one reason or another. Number 13, don't be afraid to lose. It's part of trading. There's no avoiding it. He wins 70% of his trades. As long as you control your losses, you have nothing to be scared of. And I would add a point to this that, losses, you don't have to be scared of them. Actually embrace them. Sometimes, you take a small loss or I take a small loss, and that's a good trade. I went in with a thesis. I went in with a plan. It didn't work out. It's okay. But it's part of the journey. It's part of you learning. Without that $500,000 loss, I would not be half the trader or teacher that I am today. I did not value my rules. I didn't have my rules, all refined yet. And so the big losses, while they suck, they actually made me stronger. And that's how you have to look at it. I try and warn you against big losses, but I know most of you are just going to ignore my rules about cutting losses quickly. You're going to get too emotional. And that big loss is going to suck, but there is light at the end of the tunnel. It's going to help you, really value my rules and value your money much more. So while big losses and small losses suck, they're part of the journey. All you have to do is try and control them. And the smaller, the better. But at the same time, you want to learn the lesson of what not to do. Number 14, not all losses are a result of doing something wrong. No setup is going to work 100% of the time. Sometimes it will fail, and you'll take that unavoidable loss. And I agree. Sometimes you just get shit luck. And sometimes you make a fat finger mistake. It's not the end of the world. We're all human. You don't have to be perfect. Number 15, I really love this one. He says, find your niche, especially when you're starting. Don't try and trade everything. Figure out who you are as a trader. What are you the most comfortable with? And some of us like to go long. Some of us like to go short. We're all different. And that's what makes us, humans. It's okay to be different. Just because one guy's good at buying and another guy's good at shorting, somebody likes to hold for an hour, somebody likes to hold for a day, somebody likes to hold for a year. You find out what makes you comfortable. Trading and investing should never be uncomfortable. Number 16, track your trades. Obviously, I agree with this. This is why I created Profitly. You can enter in your trades. You can enter in commentary. Now you can post watch lists and make your own video lessons. We have some more features coming out soon, but track your trades and track your progress and really spend some time on this and look back, afterwards, later on in your career, and you'll see the progress. And it's actually pretty amazing if you stick with it. Number 17, finding your niche usually requires losing first. Yes, early on, you may take some losses, but you will learn a lot about yourself and it will help guide you in the direction. Yeah, losses help mold you. That's what it comes down to. The gains aren't going to help mold you. The gains are nice, but you learn more from your losses. Number 18, mistakes are the best learning tool. I'm just ad-libbing here, and Tim Grittani is saying exactly what I'm thinking. Don't ignore your mistakes. Everybody makes mistakes, but the key to ultimate success is learning from those mistakes and not repeating them in the future. It's very bad to keep making the same mistakes and not changing. Number 19, it's okay to miss plays. So many traders want to trade everything, instead focus only on your niche. And this is so true, especially with penny stocks where there's not necessarily a great play every hour or every day. You don't have to have FOMO, fear of missing out. It's okay to not trade. Sometimes take a day off just to prove to yourself that you don't need to trade. This is a very addictive business and it can get dangerous. So be careful. Number 20, it's better to miss a play than to chase it. I believe I already said this earlier on when I was explaining it. I miss plays left and right. I remember a few weeks ago, EBIO was breaking out in the 150 area. I tried to buy it at 160, but it blew right through my limit order and it was at the 175, 180 area, and I didn't want to chase. And by the end of the day, it had gotten to I think the 220s or 230s. So in hindsight, yes, I should have upped my limit order to 170, 180, but I did not want to chase. And I stick by that. I don't mind missing trades because if you chase, you up your risk. Your whole plan is, blown to smithereens, and I don't want that. When I'm getting into a trade, I have a very specific plan. My goal on EBIO, I think my limit was right at 160 or 165, and my goal was to sell it like at 190, 195. So if I'm chasing it in the 170s and 180s, then my goal is still only 190, 195. That's too much risk and not enough reward. As it turned out, I was too conservative. It went up to the twos, but at the same time, you don't know what it's going to do. All you can do is go in with a plan. And I thought that the 190s were, I thought that 2 would be a solid wall. I underestimated it. Build your own watch list every night. It's fantastic practicing at developing your own plans. Even if you aren't trading, this is great practice. I agree 100%. And it keeps your mind straight. You'll see some days where there's just not that many trades or not that many good setups. But still do the watch list and at least see that and post it on Profitly if you want so that other people can see it too. Don't take a day off. I know that, you want to sometimes take a day off. Like, Tim, you work so hard. Why do you work so hard? Is this even success if you have to work so hard? Hey, it's not for everybody. If you want to be a self-made millionaire, you got to work hard. This is not the lotto bullshit gambling luck. This is specifically the result of hard work. I had a tweet over the weekend that I said, the more you slack, the less you stack. And that is true. So feel free to go watch Netflix, play video games, go out with your friends, family, go to nightclubs, buy bottles, go out, do whatever, and not study. You will see the consequences of your laziness later on in life. I'm sorry to break it to you. Remember, I'm trying to be nicer, but at the same time, you cannot replace hard work. If you want success, you need hard work. And the beautiful thing is that when you are a millionaire, you can take like a month off or 2 months off. You have that freedom. You've earned that freedom. So get on this level. Number 22, speaking of, know when it's time to take a break. Trading is mentally exhausting. It takes a toll over time. Tim Grittani says, when I get burned out, a week or two of vacation does wonders. And I agree 100%. In a few weeks, I'm going to the Maldives, Bali, and Thailand. I'm still going to be trading. I'm still going to be doing watch lists. I'm still going to be teaching. But you'll see me step a little back. And for me, it's a little different because I'm a teacher. And, basically I have thousands of people relying on me for guidance. But if I was just a trader, I would be going and I would just be taking time off. The beautiful thing is when you make millions of dollars, you don't have a boss and you can take time off. And I want that for you. Number 23, know the float of any stock you trade. This is so huge. You need to know the supply and demand. The float is how many shares can trade of a stock. So if a stock has already traded 3 million shares on the day and the float is only 1 million, guess what? Some of those people are going to hold on to their shares, taking more shares out of the supply. And that way, if there is good news, if a stock is trading, 3 times as many shares in existence, then theoretically people are buying it and it can keep going as some people hold back their shares and the supply is limited and the demand is great. When supply is limited and demand is great, economics 101, the price has to go up. There needs to be more higher prices to get more sellers to accommodate all the demand. I know that economics is boring and annoying, but it's useful. So knowing the public float is huge. I'll be talking a great deal about this in my Trader Checklist DVD. Only trade stocks with exceptional volatility. And I agree 100%. So many people ask me, what about this stock? What about this stock? And I look at the chart and it's not moving and they have maybe a good story or something. Focus on volatile stocks. I like big percent winners only. I don't even trade big percent losers. I know some people do. Big percent gainers for me are the key. If they're up on good news, worthwhile news, then theoretically the stock can have legs as more and more people realize the news because penny stocks are not efficiently priced. If the stock is up on bad news, on manipulation or something that's temporary, then I like to short sell because I think that it's going to crash. But focus on volatile stocks. Number 25, find stocks with huge intraday swings and take advantage. Even if you mess up, you can still have significant profits. And this goes back to volatility. I don't want to trade boring stocks. If you have a stock that's going not necessarily so crazy where it's like back and forth and it's a bouncing ball and you don't know which way is next, be very careful with that. But if there is great volatility and you look at my penny stocking part 2, Spikeability DVD, how to make millions DVD. I have several DVDs where I talk about these volatile swings. And Tim Grittani talks about it too in his Trading Tickers DVD. Level 2 is a must-use tool. I agree 100%. Use stocks to trade software. My team and I spent a lot of time and a lot of money building it. Number 27, stock scanners are a great tool. Again, that is my stocks to trade software. Plan your trades around key chart points, not your profit and loss. I know some people do this and they say, "Oh, I'm not going to look at my profit and loss." I don't know if it's because I'm a greedy Jew or if it's because I trade in order for profits and losses. Like I can't ignore my profit and loss. I know I probably should do better than this. Tim Grittani does better than this. Um, I can't do it. You beat me, Grittani. I accept defeat on this one. True traders can probably do this. I just can't. I'm always thinking about my dollar gains and dollar losses. Um, I'll never change. I know myself. So, and I don't feel bad about that. So you don't have to necessarily follow all of these rules to a T. You have to do what's comfortable for you. Sometimes I take profits too quickly. Oftentimes I do. But I also cut losses better than Tim does. So, you have to choose what's most comfortable for you. Number 29, consider risk reward and success rate. It drives me crazy to see people saying that they don't have a trade unless there's 3-to-1 risk reward. What if you have a 1-to-1 risk reward setup that wins 90% of the time? And I agree with that. Different patterns have different risk reward and different reliability ratings. And I know a lot of you guys are asking me questions about this. This is what my Trader Checklist DVD will include too. I can't wait to show it to you. It should be ready in a few weeks. But it's a lot of stuff, to put an actual numerical value on every single trade. And that numerical value changes throughout the day as the price and everything else changes. So it's a pretty crazy project that I'm working on, but it's going to be done. And number 30, I love this. Never stop learning. It's amazing how much my trading style has evolved since I first began. I started off trading 99% OTC stocks, mostly on the long side. Now I'm mainly a short seller. I'm constantly trying to learn new setups and new angles because you never know when the conditions will change. Adapt or perish. And this is probably the best point of the entire post. We can all be successful for a little bit. There are certain patterns that work well in certain markets. The billionaire plays were on fire. Ebola was on fire in a good way. Marijuana stocks were on fire and now they're, just dead. So you have to adapt to whatever is moving, whatever is working. I made my first million in 99 and 2000 buying penny stock breakouts. I didn't know that they were being promoted at the same time. I was just buying the chart patterns. 2000, 2001, well, late 2000, more 2001, 2002, and 2003, I made another million roughly shorting those pump and dumps as they crashed. And it was the same pattern as before, just later in the pattern. So I adapted because there weren't that many breakouts, and the breakouts were weak. And then ever since, I go back and forth, and there's earnings winners, contract winners. I still short pumps. There's still a whole bunch of pumps that people don't realize are happening. Still a lot of sketchy companies. Sometimes I trade NASDAQ, sometimes I trade OTC, but as a trader, you can never get lazy. You can never just say, "Oh, I'm just going to trade this one pattern, and if it doesn't work, I'll take the whole year off." Always be looking for new patterns. I mean, for me as a teacher, I'm busy teaching and creating video lessons and stuff like that, so I'm not able to research as much, but you are. And you should follow Tim Grittani's lead and have all these various spreadsheets and see different patterns that are working and aren't working. So I highly encourage you to watch Tim Grittani's DVD. If you go to timgrittani.com, I linked it in the top. Where was it? His new website, timgrittani.com. And we actually have to update this because he was at 2.7 million. But it's the highest rated DVD on Investimonials. But long story short, I mean, he analyzes everything. And if you want to keep learning and keep improving and making a few 100,000 or a few million, you're never done adapting to the markets. You can take time off, you can enjoy your profits, but as a trader, you got to adapt. And I'm so proud of Tim for sharing this. I'm so proud of Tim for accomplishing this. And I look forward to having more millionaire students. You just have to be realistic and understand that this is not a get-rich-quick scheme. It's going to take time. It's going to take hard work. but it is possible as more and more students are proving. So thank you, and I will see you in the chat room bright and early tomorrow.